Welcome back. Home prices are on the rise, with many beginning to mention the bubble word, and we are seeing home prices outstrip the 20% jump in incomes and 30% jump in rental prices. So maybe that could be true with home prices up 60% since 2012, but just because prices are moving higher, does that necessarily mean we are in a bona fide bubble? Here to discuss that with us is our next guest, Tendayi Kapfidze, who is the chief economist at LendingTree, joining us now alongside Yahoo Finance's Jen Rogers here to chat all of this. And Tenda, I mean, when we look at it, you guys were kind of posing this question in a new survey, and I was surprised to see about 4 in 10 Americans believe that we are on track to maybe crash here. The real estate market set to crash at some point in 2021. How realistic is that in your mind?
Yeah, I mean, I'm not surprised that people have that expectation, especially considering the rapid increase we've seen in home prices over the past year and just how busy the housing market got despite COVID. I do think those expectations are a bit overblown. There's a lot of factors that are supporting these high housing prices. One is really low mortgage rates. Another one is a lack of inventory. And a third one is, a bit of shifting in the mix of things that people desire from their homes. But I think fundamentally, when you look at the state of the housing market, let's say compared to 2007, 2008, which is what a lot of people think of when they think of a bubble bursting, it's in a far healthier place. Lending standards have been much tighter over the past 10 years or so than they were prior to the last crisis. And then importantly, the government has much more experience and is much better placed to do interventions within the housing market to kind of stem any potential bubble popping, things like forbearance and loan modifications. So while I do expect that the housing market might not be as hot in 2021 as it was in 2020, I wouldn't expect that we're in a bubble that would burst.
One of the things that struck me about your study is this number you had: a quarter of consumers no longer want to live the big city life. We've been talking a lot about this shift that has happened during the pandemic. How much of that do you think is a temporary shift, and how much of that you think is a permanent one?
Yeah, I also think this idea of people leaving large cities is a little bit overplayed as well. We actually looked at the data, and what we found is that most people who move within the city that they already live in. That's about 85% of people who move. And then about another 15% move from one big city to another big city. The proportion of people who move from a large city to, say, a small town is really small at around 2%. And so, this idea that people are leaving large cities in droves for smaller towns, one, is not borne out by the data, and two, is just not realistic because those small towns really just don't have the inventory or the capacity to absorb all these people who live in large cities right now. So it may be something that people are expressing as a desire because of the coronavirus, but it's certainly not something that people are acting upon in a meaningful way.
Following up on Akiko's question, just the geography of what we're seeing across the country. I mean, looking around what's happening in New York versus what's happening in South Florida, could we be seeing micro bubbles certain places? Maybe it's not overall, going back to '08, but South Florida is seeing huge appreciation in the last few years.
Yeah, absolutely. I think the possibility of micro bubbles is certainly higher than the possibility of an overall bubble within the United States. And I think South Florida also has a very kind of special risk. People are getting more and more concerned around, risks of climate change, risk of flooding, and so on. So a lot of these homes that are getting bid up in a place like South Florida, if we continue to see bigger and bigger weather events, I think that could certainly put a damper, excuse the language, put a damper on some of that hot growth in areas that are at risk from climate change, whether that be floods or fires, as we see in some of the western states.
Yeah, and Tendayi, I mean, another one of those markets, Texas might be overlooked, as we've learned in prior discussions on real estate, but Austin certainly another one of those markets seeing a big boost here. In terms of that bubble question, though, I feel like there's a point to be made about maybe the pull forward of some of the, the levers that get pulled in easing some of the buying demand here. And I imagine Goldman Sachs out talking about the real estate impact of interest rates maybe rising sooner than some people expect. What's the impact on first-time buyers that you would see come through there if we do see rates rise sooner than expected? And what are maybe some of those first things you're watching to see if we're in a cooling off period?
Yeah, I mean, it's a bit of a mixed bag, right? So the challenge with, really low interest rates is that they kind of get capitalized into home prices, and they end up with home prices rising faster and faster. And we've seen home prices rising since 2012 about 3 times the rate of income. And that is not great for first-time home buyers because they don't have another house that they already own to sell to enable them to buy the next house. And so, if we see rates kind of start to increase sooner, and that puts a damper on home prices, strangely enough, that might actually be a little bit helpful to first-time home buyers. But the biggest challenge for many first-time home buyers is really not the interest rate. The bigger challenge is the down payment, and I think this is where some of the policies that have been proposed by the new Biden administration might be helpful, including a $15,000 down payment assistance that comes up front instead of as a tax benefit a year later, as historically these things have been done. So, there's some hope, I think, for first-time home buyers in some of this new legislation that might pass from the Biden administration. But the current state of the market makes it really difficult for them because there's so much demand and there's so many kind of, wealthier buyers, I guess, who are in the market as well.
You seem pretty optimistic overall and with our ability to deal with anything that comes our way. Do you think we're done with the boom bust cycle in real estate?
No, I think a bit of it is, that's kind of the nature, of the market. You kind of, you get periods of acceleration and deceleration. The question of whether it's a bust really has to do with whether you get widespread price decreases, right? I think certainly we're going to get a deceleration in home price increases, if not this year, then, most likely next year. But whether we get a bust, I think it's quite unlikely. There's other, demographic factors also that are supporting the housing market in terms of millennials getting into their peak home buying age. Gen Z is coming up hot on their tails, also starting to get into home buying. So there's a lot of fundamental demand in the market. And then the swings up and down are a lot of them driven by interest rates. And then, unusually last year, this pandemic effect.
Tendayi Kapfidze is chief economist at LendingTree. It's good to talk to you today.